ONDS Holdings, trading under the ticker ONDS, is currently priced at $10.87 per share as of 3:06 p.m. ET on Wednesday, April 22, 2026. The stock is seeing active intraday movement with a slight upward bias today, holding steady after a significant run-up earlier in the week. While the broader market might be looking at the headline gains, the real story here isn't just a price spike. It is a fundamental shift in how this company is being perceived by institutional players and big money desks. Most people see ONDS as a small-cap drone play, a speculative bet on the future of autonomous flight. But the reality that the market is just starting to price in is far more complex and, frankly, more lucrative. ONDS is transitioning from a technology developer into a massive defense and infrastructure prime contractor. When you look at their recent contract wins, specifically the $80 million in active tenders for border security and demining in the Middle East, you start to realize that this isn't just about selling a few drones. This is about building a sovereign autonomous grid. They are moving into the space where they provide the entire nervous system for national security, and that kind of sticky multi-year government revenue is what changes the valuation math for an individual brokerage or a retail investor using a Fidelity mobile app. There is a massive tension right now between the expectation that ONDS is a story stock and the reality that they are now sitting on a pro forma cash balance of over $1.5 billion. Think about that for a second. For a company that was struggling for air just a couple of years ago, having a war chest that size allows them to be the aggressor. They aren't just reacting to the market, they are shaping it through aggressive acquisitions like Rotron and Mistral. This shift is catching a lot of people off guard. If you've been looking for investment help on various investing sites or scrolling through the Robinhood app for a momentum play, you might have missed the structural re-rating happening here. We are seeing institutional activity that suggests the smart money is no longer viewing this as a venture-style bet, but as a legitimate competitor to traditional defense primes. Let's talk about the recent price action because it tells a story of intense accumulation. Over the last month, we've seen ONDS move from the mid-8 range up to where it sits now near 11. This hasn't been a straight line. We saw a 7.3% surge just 2 days ago on April 20th when they announced that $10 million initial order for the Israeli border project. That was a reality check for the shorts. The expectation was that these contracts would take years to materialize, but the reality is that the geopolitical climate is forcing an acceleration. Governments are panicking about border security and drone threats, and ONDS is one of the few companies with a combat-proven label on their tech. When you see daily volumes consistently hitting the 50 million share mark as we saw through mid-April, that isn't just retail churn. That is the kind of volume associated with major funds building positions, the kind of activity you'd track if you were using an interactive brokers platform to monitor deep market liquidity. If you are using something like Schwab Intelligent Portfolios or a SoFi robo-advisor, you might not see ONDS pop up because it's still highly volatile. But for those doing self-investing, the divergence between the current price and the analyst median target of nearly $20 is a gap that's getting harder to ignore. Analysts at Oppenheimer and Needham aren't just throwing darts. They are looking at a revenue guidance that was just raised to $375 million for 2026. That is a 640% year-over-year growth projection. Usually when a company says they're going to grow 600%, the market rolls its eyes. But ONDS has a backlog of nearly $70 million and a strategic partnership with Palantir that is actually starting to bear fruit in terms of software-defined intelligence. They are using Palantir's AIP to manage their autonomous platforms, which gives them a level of scale that a typical hardware company just can't match. The business model here is a classic razor and blade strategy, but on a massive industrial scale. The razor is the autonomous hardware, the Optimus drones, the Iron Drone Raiders, and the heavy engineering vehicles from their recent Indo-Earth-moving acquisition. The blade is the recurring service and software revenue. Once a government installs a sovereign security grid along 500 kilometers of border, they aren't going to switch providers next year. They are locked into the ONDS ecosystem for maintenance, AI updates, and data processing. This is why the path to profitability is becoming clearer. Management is pointing towards positive EBITDA for their product companies by Q3 of this year. If they hit that, the risk narrative that has suppressed this stock for years completely evaporates. You also have to look at what they are doing in the rail sector. It's the less sexy part of the business, but it's the foundation. ONDS Networks is working with Class 1 railroads to modernize their telecommunications using the full MAX standard. This is mission-critical IoT. If you're into online investing and looking for companies that have a moat, look at the regulatory environment for railroads. Once a standard like FullMAX is baked into the infrastructure of North American rail, it's there for decades. It's the kind of long-term stability that makes Fidelity ETFs or Fidelity mutual funds look for these types of underlying technologies, even if the parent company is still in a high-growth phase.
However, the market still has lingering doubts, and that's where the opportunity lies. The skepticism usually centers on their cash burn and the dilution from their January equity raise. The expectation was that the $1.8 billion they raised since last June would be wasted on moonshot projects. The reality is that they are using it to buy revenue-generating companies with established defense contracts. They are buying their way into the prime club. This isn't just speculation anymore, it's an industrial roll-up. If you're checking your SoFi investing account or looking at your Robinhood stock trading dashboard, you need to be asking if the market is still pricing ONDS based on its 2024 self or its 2026 potential. One of the most interesting catalysts on the horizon is the 2026 FIFA World Cup. ONDS auspiciary Centrix was selected to provide counter-drone protection for the event across the US, Canada, and Mexico. This is a multi-million-dollar contract, but more importantly, it is a global marketing stage. Every security agency in the world will be watching how they handle the airspace. If they can secure an event of that magnitude without any disruptive jamming or incidents, they become the gold standard for civilian and homeland security drone defense. That is the kind of catalyst that leads to a parabolic move in the stock. Comment below how many shares of ONDS you currently hold, or if you think the defense sector is getting too crowded for small players to survive. I want to see where you guys stand on this one. Looking at the technicals, the $10 level has become a massive psychological floor. We've seen several attempts to push the stock back down into the single digits over the last few weeks, but every dip has been aggressively bought. That tells you the weak hands are out, and the strong hands, the institutional fidelity brokerage types, are starting to sit on their positions. The VWAP has been trending steadily upward, and the fact that we are holding $10.87 despite the broader nasdaq volatility is a very bullish sign. Usually, a high beta stock like ONDS would be the first to get sold off in a flat market, but today it's outperforming. The macro environment also plays into their hands. We are seeing a global push for technological sovereignty. Europe in particular is desperate to stop relying on Chinese or even sometimes US tech for their critical infrastructure. That's why the Onberg joint venture with Heidelberg in Germany is so smart. It localizes manufacturing in Brandenburg. It makes ONDS a German company for the purposes of European defense tenders. This allows them to bypass the political hurdles that often stop American firms from winning big European contracts. It's a sophisticated play that most retail investors simply aren't tracking on their Robinhood crypto or basic investment apps. As we look towards the end of 2026, the contrast between expectation and reality will be the primary driver of the stock. The market expects ONDS to struggle with integrating all these new acquisitions. The reality appears to be that they are building a vertically integrated powerhouse that can sense, detect, and neutralize threats across land, air, and even the stratosphere with their worldview partnership. If they hit that $375 million revenue target, the current $5.24 billion market cap is going to look like a bargain. We are talking about a company that could potentially double its revenue again in 2027 if the current tender pipeline converts at the rate they expect. If you're managing your own money through a Fidelity IRA or an individual brokerage, you have to decide if you believe in the autonomous grid thesis. The bears will point to the fact that they are still not net profitable on a GAAP basis. The bulls will point to the $1.5 billion in cash and the 800% growth in their autonomous system segment. For me, the reality is that the demand for this technology is no longer optional for governments. It's a necessity. Whether it's demining in Israel or protecting the World Cup in New York, the world is becoming more dangerous, and ONDS is selling the shield. To wrap this up, ONDS is currently at a tipping point. The stock at $10.87 reflects a company that is finally proving its critics wrong. We've moved past the can they do it phase and into the how fast can they scale phase. The expectation was a slow, painful grind towards relevance. The reality is an explosive acquisition-fueled expansion into a multi-billion-dollar defense prime. While the volatility will remain high, this is not a stock for the faint of heart. The underlying fundamentals are stronger than they have ever been. Whether you use Robinhood Investments, SoFi Active Investing, or a high-end interactive broker's account, this is a ticker that demands your attention, because the gap between what the market thinks and what the numbers are showing is rarely this wide. Keep a close eye on that $12 resistance level. If it breaks that with volume, we might not see the $10 range again. Stay grounded, watch the contract flow, and remember that in this market, the only thing that matters is the delta between the story and the truth. ONDS is finally telling a truth that the market is forced to hear. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video. Comment your thoughts. Share with your friends. Subscribe for more updates.